Imagine this. You're holding on to what seems like the perfect investment, one that's delivering massive returns and is admired by nearly everyone in the financial world. Would you ever think of selling it? Well, that's exactly what Warren Buffett did. He sold 115 million shares of Apple, a company he's often called one of the best businesses in the world. Why would the world's most successful investor sell a significant chunk of his largest holding? Did he lose confidence in Apple? Or is there something deeper, something more strategic, that we can learn from this move? Here's the thing about Buffett. Every decision he makes holds a valuable lesson, not just for investing, but for life itself. So, stick around as we unpack this surprising move and uncover the wisdom behind it. Trust me, what you're about to hear might just change the way you think about success. To truly understand Warren Buffett's decision to sell Apple stock, we need to go back to one of his most important principles. Look at stocks as businesses. What does this mean? For Buffett, owning a stock isn't just about buying a piece of paper that goes up and down in value. It's about owning a part of a real business, one with customers, products, employees, and long-term potential. Let's break it down with an example. Imagine you own a small coffee shop. If the shop is profitable, has loyal customers, and keeps growing year after year, you wouldn't rush to sell it just because someone told you the value might drop tomorrow. Instead, you'd focus on the long-term health of the business, how it's run, its growth potential, and its ability to weather tough times. This is how Buffett looks at his investments. He doesn't see Apple, Coca-Cola, or American Express as just stocks to trade. He sees them as businesses he partially owns. And when he evaluates these businesses, he considers their ability to generate value over decades, not just in the next quarter. Buffett's view of Apple is unique. He doesn't see it as just a tech company. He sees it as a consumer business with an unparalleled ecosystem. Think about it. If you own an iPhone, chances are you also use Apple services like iCloud, Apple Music, or the App Store. Once you're in the ecosystem, it's hard to leave. This creates customer loyalty that few companies can match. Buffett once said, "Apple is not just a stock, it's a company with products people love, and they'll keep buying them for years to come." This perspective explains why Buffett hasn't completely sold off his Apple shares. He knows that Apple's long-term potential remains strong, even if he chooses to sell a portion of it for strategic reasons. So, what can we learn from Buffett's philosophy? 1. Focus on value. Whether you're investing money, time, or effort, think about the long-term value you're building. 2. Evaluate businesses, not prices. Don't obsess over day-to-day fluctuations. Focus on the fundamentals of what you're investing in. 3. Commit to quality. Like Buffett does with Apple, prioritize quality over quantity. It's better to have a few excellent investments or priorities than to spread yourself too thin. Understanding this philosophy is the first step to appreciating Buffett's decision to sell Apple stock. It's not about losing faith, it's about staying true to the principles of value and long-term thinking. Now that we've explored Buffett's philosophy, let's address the big question. Why did he sell Apple stock? On the surface, it seems contradictory. Apple is one of the most successful companies in history, and Buffett has often praised its leadership and products. But as with everything Buffett does, there's a deeper strategy at play. Let's break it down into 3 key reasons. Buffett is a firm believer in maintaining flexibility. By selling a portion of Apple shares, he increases Berkshire Hathaway's cash reserves. This gives him the ability to act quickly when new opportunities arise. Think of it like clearing space in your closet. Even if you love the clothes you already own, sometimes you need to make room for something new. For Buffett, selling Apple isn't about abandoning the company. It's about being prepared for the next big investment opportunity. Buffett is also highly strategic when it comes to taxes. By selling Apple shares at the current federal tax rate of 21%, he locks in gains before potential tax increases. Buffett has seen tax rates rise as high as 52% in the past, so he knows the importance of timing. Here's the key takeaway. Even the most successful investors consider the impact of taxes on their decisions. It's not about avoiding taxes, but managing them wisely to maximize value. Finally, Buffett's decision reflects his unwavering focus on the long term. He hasn't lost faith in Apple. In fact, he's said that Apple will remain Berkshire Hathaway's largest holding unless something extraordinary happens. By selling a portion of the stock, Buffett ensures that Berkshire remains balanced and prepared for future challenges without compromising his belief in Apple's value. So, why should this matter to us? Buffett's decision teaches us three things. 1. Be ready for change. Even the best investments or plans need adjustment. Don't hold on too tightly to one thing if it prevents you from seizing new opportunities. 2. Think beyond immediate gains. Consider the broader implications of every decision, from taxes to long-term strategy. 3. Stay true to your values. Selling doesn't mean losing faith. Sometimes it's a strategic step to ensure stability and growth. Buffett's move reminds us that success isn't about making perfect decisions every time. It's about making thoughtful, strategic decisions that align with your goals and values. Now that we understand why Buffett sold Apple stock, let's extract the lessons from his decision. Lessons that apply to both investing and life. Warren Buffett's moves are never just about making money. They're about mastering the art of decision-making, staying true to principles, and adapting to change. Here are some key takeaways. Buffett teaches us the importance of staying flexible. Even when you have something great, like Apple in this case, being open to change allows you to prepare for new opportunities. In our lives, this might mean letting go of a secure job to explore a new career path, or reevaluating how we spend our time and energy to focus on what truly matters. Flexibility doesn't mean abandoning what's working. It means being willing to adjust when the situation calls for it. One of Buffett's greatest strengths is always being prepared. By increasing Berkshire's cash reserves, he's positioning himself to take advantage of future opportunities. This principle applies to more than just financial investing. It's about preparing yourself for life's next big move. Think about it. Are you building the skills, relationships, and resources needed to seize opportunities when they arise? Preparation isn't just about having money in the bank. It's about being ready mentally, emotionally, and strategically. Buffett's decision was calculated. It wasn't driven by fear or greed, but by thoughtful risk management. He sold Apple not because he doubted the company's future, but because it aligned with his broader strategy. In life, we often face situations where emotions cloud our judgment. Buffett's approach reminds us to take a step back, analyze the bigger picture, and make decisions based on logic, not feelings. By holding on to most of his Apple shares while selling a portion, Buffett strikes a balance between maintaining stability and positioning for growth. This dual approach ensures that he continues to benefit from Apple's long-term value while having the flexibility to explore new investments. In our own lives, this could mean maintaining a balance between pursuing ambitious goals and ensuring our foundation, whether financial, emotional, or physical, remains strong. The overarching lesson from Buffett's decision is this: success isn't about holding on to everything. It's about knowing when to let go, when to adapt, and when to prepare for what's ahead. It's not just a strategy for investing, it's a philosophy for life. Buffett's philosophy isn't confined to the stock market. The principles he lives by, long-term thinking, valuing what matters, and staying adaptable, can transform the way we approach everyday life. Let's explore how we can apply these lessons beyond investing. Buffett's emphasis on long-term value is a game changer. Whether it's a career choice, a relationship, or a personal project, ask yourself, where will this take me in 5 or 10 years? For example, if you're learning a new skill, don't get discouraged by slow progress. Buffett reminds us that time is the friend of great investments, and that includes the investment you make in yourself. Focus on the process, not just the immediate results. Buffett famously avoids investments he doesn't understand. The same applies to life. When making decisions, focus on areas where you have clarity and confidence. For instance, if you're starting a new business, stick to industries you know well. If you're managing your health, rely on tried and true practices instead of chasing quick fixes. Understanding your strengths and limitations is key to making smart choices. Buffett's strategy of maintaining cash reserves is about having a solid foundation. In our lives, this translates to building stability, financially, emotionally, and physically. Financially, save a portion of your income to create a safety net for emergencies or opportunities. Emotionally, cultivate relationships that provide support and stability. Physically, take care of your health to ensure you have the energy to pursue your goals. Buffett's willingness to sell Apple stock while keeping a majority stake shows his balanced approach to risk and reward. In our own lives, this means taking calculated risks without jeopardizing what we've already built. For example, if you're thinking about switching careers, don't abandon your current role without a plan. Test the waters, build a safety net, and then make the leap with confidence. Buffett's ultimate goal isn't just personal success, it's about creating value for others. Whether it's through philanthropy or building businesses that improve people's lives, he understands that true wealth comes from making a positive impact. Ask yourself, how can I contribute to those around me? It could be mentoring someone, volunteering, or simply being there for a friend. The value you create will always come back to you. Buffett's life is a testament to the power of simplicity, patience, and purpose. By applying these principles to our own lives, we can not only achieve success, but also build a life that's meaningful and fulfilling. So, what's one Buffett-inspired change you'll make today? Whether it's thinking long-term, preparing for opportunities, or creating value for others, take that first step. Remember, the best investment you can make is in yourself.